Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance, exploring the latest developments and trends that shape our global economy. I'm your host, Lewis, and I'm excited to have you join us today. We're starting off with a big story that's been making waves in the automotive industry. President Trump has announced a 25% tariff on foreign cars and parts, set to take effect in April and May respectively. This move is expected to have significant implications for manufacturers and consumers alike, particularly in countries like Canada and Mexico. Now, let's break down what this means. The tariffs will apply to imported passenger cars worth $220 billion, with major suppliers like Japan, South Korea, and Germany likely to be impacted. The Mexican peso has already weakened by over 0.5% against the US dollar, while the Canadian dollar has also taken a hit. Proponents of the tariffs argue that they will help protect American jobs and boost domestic manufacturing. However, critics warn that this could lead to higher prices for consumers, potentially dampening demand and ultimately hurting the very industry the tariffs are intended to support. It's also worth noting that this move is part of a broader trade strategy by the Trump administration, which has been characterized by a willingness to challenge traditional global trade norms. As we've seen with previous tariff announcements, the reactions from international partners can be swift and decisive. As investors and market watchers, it's essential to stay informed about these developments and their potential impact on the stocks and sectors we follow. We'll be keeping a close eye on how this story unfolds and exploring the implications for our listeners. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and market trends in our middle segment today. I'm your host, Lewis, and we're exploring an insightful conversation with Dalen Pinto, a seasoned expert in the field. As we navigate through the complexities of the market, it's essential to stay informed about the latest developments and their potential impact on investments. Recently, there have been concerns about tariffs imposed by the U.S., particularly affecting the auto sector. Dalen Pinto shares her perspective on how these tariffs might influence Indian auto companies, highlighting that most Indian autos are fairly domestic-oriented. She explains that while the tariffs may not significantly affect Indian original equipment manufacturers, the auto ancillary companies could face more challenges due to potential direct and indirect impacts. This nuanced understanding is crucial for investors looking to make informed decisions amidst uncertainty. Dalen Pinto also touches upon the importance of waiting for clarity on these tariffs before making any significant changes in investment strategies. The market, she suggests, seems optimistic that the tariffs might not be as disruptive as they appear, potentially avoiding a recession. However, it's prudent for investors to adopt a wait-and-watch approach until more clarity emerges. As we consider these insights, it's clear that navigating the current market landscape requires a deep understanding of global events and their potential ripple effects on various sectors. Whether you're a seasoned investor or just starting out, staying abreast of such developments is key to making wise investment choices. The interplay between global policies, economic indicators, and market trends is intricate, and experts like Dalen Pinto offer valuable guidance through their analyses. As we move forward in this rapidly changing financial environment, keeping a balanced view and considering multiple perspectives will be indispensable. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's episode, I want to bring your attention to a pressing matter that's been making headlines in the world of international trade and commerce. The recent announcement by the U.S. administration to impose tariffs on the auto sector has sent shockwaves across the globe, with many experts warning of devastating consequences for the industry. Now let's break it down. The tariffs are expected to add thousands of dollars to the cost of vehicles, making them less competitive in the global market. This could lead to widespread shutdowns in both the US and Canada, resulting in significant job losses and economic instability. The Canadian Chamber of Commerce has already sounded the alarm, stating that these tariffs will not only harm the auto sector, but also undermine North America's leadership role in the industry. But what about the arguments in favor of these tariffs? Some proponents claim that they will encourage companies to bring their parts divisions back to the US, creating new jobs and stimulating economic growth. However, critics argue that this approach is misguided and will ultimately harm American consumers, who will be forced to bear the brunt of increased costs. As we analyze this situation, it's essential to consider multiple perspectives and weigh the potential risks and benefits. While some may see these tariffs as a necessary measure to protect domestic industries, others view them as a reckless move that will have far-reaching and damaging consequences. As investors, it's crucial to stay informed about these developments and assess their potential impact on your portfolios. The auto sector is a significant player in the global economy, and any disruptions to this industry can have ripple effects across various asset classes. In conclusion, the imposition of tariffs on the auto sector is a complex issue with no easy answers. As we navigate this uncertain landscape, it's essential to remain vigilant, diversify your investments, and be prepared for potential volatility in the market. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.